Welcome. Today we're exploring the stock exchange, understanding its purpose and impact. Notice the quote here. The market is a pendulum swinging between optimism and pessimism. Think about it. How often do your own financial decisions swing like that? As we start, grab your PDF handout at the link in the description. It'll help follow along. Imagine the stock market not just as numbers, but as millions of human decisions colliding. How does that change your perspective on investing? Slide 2, Agenda. Here's what we'll cover. First, a quick hook into why stock exchanges matter. Then 5 key lessons. We'll break down actionable takeaways, a personal reflection, and finish with motivation. See these points? Which one sparks curiosity for you? Maybe one feels more relevant today. Hold on to that as we move forward. Slide 3, Introduction, Hook. Why care about stock exchanges? They're the central hub where shares are bought and sold. That means businesses get funding and investors get opportunities. Think of Apple raising capital. Without a stock exchange, that growth slows dramatically. So when you see a market index rise or fall, it's not just numbers, it's confidence, fear, and strategy all combined. Ask yourself, how aware are you of these underlying dynamics in your own investments? Slide 4, Lesson 1, Core Purpose of a Stock Exchange. Turning to Slide 4. The core purpose is structure and transparency. Each bullet reflects this. First, a regulated marketplace protects everyone. Second, it reduces fraud. Third, it builds trust. Remember NYS and NASDAQ? Millions of trades happen daily with confidence because the system is structured. In plain terms, without this order, chaos rules and your investments could be exposed. Think, are you relying on structure or winging your trades? Slide 5. Lesson 2, How Companies Benefit. Slide 5 explores how companies leverage exchanges. First point, raising capital efficiently through IPOs. This fuels growth. Tesla is a prime example. Its IPO funded innovation in electric vehicles. Second, capital drives expansion into new markets. Third, investors gain entry points to share in success. Dalio's principles remind us that money empowers change. How might you spot companies using it wisely? Slide 6, Lesson 3, Investor Opportunities and Risks. Now Slide 6, Opportunities and Risks. You can create wealth here, but risk is real. First, diversify to balance exposure. Second, research before committing. Third, Buffett reminds us, risk comes from ignorance. Malkiel teaches that markets are a mix of predictable patterns and surprises. Ask, are you making moves informed or reacting to headlines? And how do you check your own biases before acting? Slide 7, Lesson 4, Liquidity and Market Efficiency. 7 covers liquidity. First, it allows you to buy or sell quickly without affecting prices. Second, it ensures fair value discovery. Third, high-volume markets like NYSE provide flexibility. In essence, liquidity is freedom. Think about whether you're stuck in low-volume positions that limit options. How can you make choices more fluid in your portfolio? Slide 8, Lesson 5, Global Economic Impacts. On Slide 8, we see the macro picture. Exchanges shape economies, fund innovation, and reflect investor sentiment. Think back to COVID-19 market shifts. They mirrored global fear and optimism. Second, capital formation impacts jobs and industries. Third, your investments ripple outward. Reflection. How connected is your portfolio to global events, and could awareness improve your decisions? Slide 9, Actionable Takeaways. Slide 9 is practical. First, start learning. Try paper trading. Second, diversify across sectors. Third, track liquidity to stay flexible. Fourth, monitor global events but stay long-term. Fifth, journal your choices. Simple steps, but they compound. Ask yourself, which one can you implement immediately this week? And are you consistent enough to see real results? Slide 10, Personal Reflection. Slide 10 invites reflection. Markets reflect trust, psychology, and decisions. Applying these lessons builds patience and analytical skill. Ask, what's my next bold step? Could it be learning more, adjusting allocations, or watching liquidity closely? Your angle, treat these lessons as a mirror to your behavior. Even small awareness shifts outcomes. Slide 11, Conclusion and Motivation. Finally, Slide 11, Recap. Stock exchanges power economic growth and wealth creation. Start small, stay curious, apply one strategy today. Grab the PDF handout to reinforce these steps at PDF link. Remember the quote, "Knowledge compounds faster than capital." How might you let learning guide your next financial decision? And if this journey sparks value, subscribe to stay on track with more insights like this.